All right, so Greg, this is a market-focused show, but I do have to talk about the intersection of D.C. and Wall Street right here. We saw Democrats win two very high-profile elections in New York and New Jersey. We also saw the Democratic Party win a redistricting fight in California. At the same time, this is the one-year anniversary of the president being elected and the longest shutdown in U.S. history. A lot of intersections here. Do you think that those elections, were they really a litmus test? Does that have any kind of impact on the market, this idea that sentiment could be changing?
Frank, I think it just speaks to the divided nation at this point in time. And people are looking to always do better. And you look at the elections, the results, and the way this has come out. I think there's a lot of fiery speeches that have taken place. But again, running a city like New York is very complex. And I think there's going to be a lot of challenges. So while the parties have gone late into the night at this point in time, Frank, I got to tell you, when it comes down to actually running the city, it's probably going to be a bigger challenge, regardless of who won that particular
I
election.
know you're focused on that one election. I'm just saying more this sentiment, the idea that the president felt like he had a mandate coming into office a year later. I think at least that thought line has changed a bit for a lot of people.
Yeah, I think it has probably changed to a degree, but at this point in time, the country is still very divided at this point in time. And yeah, it's perhaps swinging a little bit toward the Democrats and sort of speaks to a little bit of what midterm elections could ultimately look like. But there's still a lot of things to get done and a lot of time to get done at this point in time.
All right, let's talk about one rare area of consensus in today's world. Valuations are too high. People keep saying that's the reason why the markets have sold off the last couple of days. We saw Palantir, kind of the poster child for high valuation, lower today, lower yesterday, even after strong earnings. Are you concerned about this sentiment about valuations? And also, are you concerned about the valuations?
Frank, it's a great question. And the way we've looked at this market, we just put out our monthly piece here today here at Piper. And, we called it rotating but resilient. And we look at this market and sort of thinking about the technicals first and foremost. We got to talk about market structure, Frank, if we're going to talk about valuation, because there are more ETFs than there are individual stocks in the market now. And when you have conversations with investors, nobody buys an ETF because of valuation. So while everybody talks about valuations being expensive, it's more about money flows at this point in time and momentum measures and metrics. And so while people are calling out valuation, I'd point out something even more important, Frank, which is below the surface of this market, you've got more stocks in downtrends than you have in uptrends at this point in time. And the number of stocks and breadth of this market has been deteriorating pretty steadily over the last couple of months. So we're not surprised to see this market coming in. And especially when you've got very few stocks actually making 26-week new highs in this market, yet the indices are only single digits off of their highs. This market is due for at least a pullback, if not a correction. Doesn't mean the bull market's over. But again, everybody's talked about bullish, positive November. Not sure that seasonality is going to play out this time.
I also want to talk to you about the rising dollar. We've seen the dollar higher over the last 5 days. Over the last couple months, it's been higher. I believe it's actually at a 3-month high. Part of the reason that we've seen such really strong earnings beat has been a weaker dollar. If that situation changes, does that change your view of Q4 and also 2026? And does that change the, trajectory of the market?
At this point in time, going back and looking at the DXY, looking at that chart, we got to the lower end of a multi-year upward trending channel. It does mean that we are probably going to see strength in the dollar. That is going to be a little bit more of a headwind for companies going forward. But at this point in time, a strengthening dollar probably speaks to a little bit more of a sort of a defensive tone in this market at this point in time. And again, we don't think that the bull market is over. We don't think that the earnings are going to have to materially decline in here. We just think that this is a market that's got bad breath, that frankly is a little bit fatigued and needs a rest.
I want to talk to you about your additions to your tactical portfolio. JP Morgan, Take-Two Interactive, and also Exact Sciences, the maker of Cologuard. Now, that one's pretty interesting. It's kind of a healthcare play, and it's also a consumer demand play. I know if you watch the commercials, they say it's covered by insurance, but at the same time, you have to spend some money to get the test. Why are you feeling so confident about that stock in particular? Just curious.
Well, in terms of Cologuard specifically, when you go back and you look at a big, longer-term, multi-month chart of this particular company, clearly the reversal is happening. You also just saw the company put out results. The results were certainly decent, and it seems to be a pretty straightforward way for people to to take these tests where they've been more hesitant to take a full screening. They can now take these tests and do it in a much more cost-effective manner. But
Okay.
Frank, you got to step back and sort of look at this rotation of this market. Not only are you seeing things like exact sciences working, you're starting to see a heartbeat in healthcare that we haven't seen in a long time. So this market is rotating, and you are seeing the healthcare stocks doing well.